Hello, hello, hello. Welcome to another video of ES Futures Trading. Today is Friday, June 16. It is 12:41 p.m. I am doing. I'm not that. Um, I'm not doing these videos as regularly as I used to do because one thing, the primordial um, objective at first was to help me to keep to gain focus, to be focused in the market. I think that objective was achieved. I achieved that, and now what's happening is it is getting in the way now. It's getting in the way of trading. I cannot do the stream. I cannot do the readings, the lectures of the market, while at the same time I try to trade. It has proved to be bad for me. Um, today today we have something very. The market has one opportunity uh, today. The market give us one opportunity, one opportunity today. Um, if but if we wanted to take advantage of the opportunity, we have to be able to have a proper reading. Um, which was, which this opportunity was. We were talking a lot all these days about how elongated this market was, how how the inventory is super long and very risky to be long in this market. Uh, let's do a small, really quick um, homework here, very fast. This is the previous contract. This is the contract, the ESM 23 that expired, that has just expired at 9:30 a.m. today. You can see there is no trading now. You know, let's stop it here. Um, I want to see the daily here. Notice that this contract started trading. I guess it was 12 and April 12th, somewhere in here it started to trade. And from that on, the trading range, and now it has a breakout to the upside. I can imagine here. No, you can see this is a short squeeze. This is shorts being squeezed, either shorts or plus naked option sellers. In this case, naked call sellers here. Um, that were caught short. Now this most people were most traders maybe were expecting a break here. You can see a range here, market trading to the high, low, high, and this is lower, right? This is lower than this. Okay, the next time it's going to be even lower, no, but it is going to come down here. But it didn't. You never know what the market is going to do. This is when the short squeeze started here. Market have a breakout, and all of the the length of the breakout is very impressive. You can see this is short covering here, and it's still having this formation here is typical of short covering. Well, it doesn't mean the market is going to break, right? It tells us that being long here is risky. It's a risky business here. But regardless, the market keep going to the upside, and all the shorts were squeezed. All the shorts were squeezed here. That was the lecture from yesterday at the closing. If you if you were I guess I had a stream yesterday. I don't remember what time. I guess it was again around 12:30, something like that. Um, I was telling, we were talking that how the odds that this the squeeze yesterday, yeah, it was new, you know. But this was the old it was the old contract. I'm going to pull the old one here. Okay, this is the old one. We were talking about how when the market was trading in range here, market was trading, this was the 4400 here, right? The 4400. Watching here, 4400, right here, right? Remember, the new one, the adjusted contract, however, has tells us a different thing, right? The 4400 was way down here, way down here, okay? But which tell me, okay, this is when I had this, what are the odds that this market keeps going higher? It's extremely risky, but there are still the only thing that these naked call sellers um, need to keep the premium. For example, here is they could have sold this. They could have sold these options again. This is very tricky here. These options having uh, at this level. I don't know the 40. No, where is the 4400? 4400 right here, right? The round number. The only thing I need to keep my premium is to put the market to close below this. It didn't happen. Right? That's why I have, the impression that the spike that the market, the final spike to the upside, the final. This is, what I guess Jim called this the pain trade. The pain trade is if the market goes in the direction where it can influence the more pain. Right? Trees were cut short here, and they were being squeezed shorts, then options, naked options, sellers, and this was the final spike. When the market broke about the 4400, about this level here, this specific level here, about that level, above that level. That's not the last. This is, you could say this is, I can call this basal spike, right? This is a spike, the basal spike, which is going to be relevant for today. Um, this was the overnight. The overnight. There was something very particular here. It was this low here. The late pullback low. Late pullback low here. Call this late pullback low. Late pullback low, which also could be could be a you know um, rebalancing of the longs here. They were liquidated. There was some liquidation here, but it didn't close the distribution. The distribution it didn't close for one tick. Okay, down here it didn't close it. You can see closing the distribution was the down here. It didn't close it. It stopped one tick from closing the distribution. And the overnight, I was watching the overnight. Again, very, short, long inventory was being rebalanced. Um, what the final thing that tells us, the thing that gives you the opportunity, if you have the right reading, right, is this spike in at the close. This is a very particular day, right? Because after this, at 9:30, this contract stops. So if you have not closed your position here, you're well underwater. If you have sold options or calls, naked calls at above up, and put your stop above 4,400, right? This is the final spike. This is where these traders, they were expecting the market to come below the 4,100. I am speculating, right? When that didn't happen, it rather started going to the upside, took yesterday's high out and give us another spike. This is when the traders finally start, this is capitulation here, what you have seen here. And what happened after this, is has a lot to do with what happened, the whole, you know, the whole week, the whole month before. In order to keep going to the upside, this contract is not valid anymore. It's closed. It's settled. What we have now is September contract. Okay, we have September contract here, which is this one. This is September contract. In order to keep going higher, it will need new volume, new buyers. It cannot keep going to be just short covering because there are not shorts to be squeezed here anymore. All the shorts were closed here. There are always, right, but not in the amount that were in the previous contract. So immediately, just after the opening, right after the opening, market right before the opening, market makes a new high in the overnight. This is market high. This is high. This is market high, but it is in the overnight. All right, very important. It is, and notice how close the market was sold. Just one tick. But this is the trade coming to you, coming to you. It gives a spike, lazy spike in the overnight, opens. It didn't take the overnight high, and then liquidation. What trades are being liquidated here? Not not the ones from the old contract, because this is history. It is not. This is not anymore, right? This is the new contract, the new loans, the weak loans of the September contracts that are being liquidated here. But as it has good tempo here, when market open with a gap to the upside, market has a gap to the upside. Notice where it opens, close the gap right away. The faster it's closed. If a gap is going to be closed, the selling happens right after the opening. You could see the selling. Now it is we have this triple quality, triple what is name, triple witching today. But it's kind of risky here, very risky as well, right? Very risky. But the odds favor the downside, just because just because of what I said, what I'm talking. The contracts, the longs, the shorts being squeezed, and suddenly those are gone. Just like magic, they are gone. They're no more. This is a new, this is a new contract here. These longs, this market is coming from, what the heck is this? I guess I make a mess here. Oh, these are new ones. All right. Now, traders get emotional. The traders get very emotional. Uh-oh, it's not uploading. What happened? What's happening here? Oh, this is the AM. What I want is the ECU. Okay. Did Once the market open gets back into inside this trading range, the next thing you want to see is start monitor value. What happened to value? While the value was first higher, overlapping to higher, and finally it is inside value. We have inside value now. It has a week a week high here, mechanical high. And notice how now we have these three highs, right? We have these three highs. And again, you got a bunch of stops here, here, and this high is not good as well. This, for me, this was the only opportunity, the one clear opportunity today. This is small liquidation here that you could have taken advantage of. After that, you the first thing to monitor for continuation was closing these distributions, right? First, getting back into previous day range. Second thing, um, taking what was the second thing? Settle. The next thing, I guess this is overnight held back. Let me put this one. It doesn't have it here. Where is overnight held back? Here it is. Here it is. That's the next thing to monitor for continuation here. Downside. It took overnight. It not just took this one, but it is stopped here. It stopped here and bounced from here. This was another opportunity too, but it has more risk here, right? Because your stop actually is way up here. The risk was higher here. And having this triple witching, it is very complicated, very weird things can happen, right? Weird things can happen. I have said um, I wasn't going to trade this week, but that was my rule. And of course, rules are meant to be broken. Um, but that was it. When this market took overnight, held back, then settled, you notice the first thing you notice is it is stopped here. As soon as it took settled, it just dies here. The next thing to the downside was last and POC, overnight POC. It didn't get that number. It traded for a long time here. And just dry, volume just dries. You can see the whole volume dries here. I am doing some changes on my charts. I have started, instead of having two separate charts, what I did is I am adding, instead of having TPOs here, I would have this on the side. I used to have this on the side, but um, once you have the trade, what you want to do is monitor for continuation. I think the best way to do it is one is tempo, right? How the conviction, how convincing is the movement to the downside. It is having downside continuation. Are the lower references or the references the lowest are being taken? What is happening? How the trade is being conducted. That was it. After this happened, there was nothing after that. Then you have this very, there's a lot of congestion in this market. After this nice momentum opening here, you got momentum here, and then you can see there's a lot of congestion. This back and forth, back and forth. There's nothing here after that. Nothing. The main thing is value. Okay, the market has closed these distributions here. You know, the distribution that we have here has been closed. Market made a low here. Notice how volume market is been having some rotation here. If you were observing, probably this is your destination trade. This area, the ultimate destination trade is this high. Uh, but to get over here, I guess this is the area where you start to take profits here. If there is a spike to the upside, that's it. That's it. You know, because the spike will take care of this stops here. There's some kind of volume here. Not too much volume, but there's volume here. Notice that there isn't no tanks anywhere to be seen here. No tank case. There is nice taper here, nice taper here. This is kind of like a crazy bar, same as this one. Notice? Notice how this is very, very uneven histogram. I call this sign up mechanical trading, and this one take care of this histogram, but it is the same way. The same was very very mechanical and very disorganized to the upside, and the same thing to the downside. It's kind of like when the market do these kind of things, I don't trust these movements. I rather like, for example, this system was very nice here. You can see how even this, how very well distributed it is. And I have one one little one little uh, you know low high low high low high low high low. Very very nice, right? The same thing goes here. Now this is not that well. It gave us it was a mechanical selling here, mechanical selling. They are using traders are using previous day high to sell from here, and again from here, and this one too. Notice how many periods have been sold from this level here. It's very dangerous now to be short. Again, that's the very very short time frame trading, right? Very short time frame trading. The, I would say that this market, we have an upside market. The trend is to the upside has get too long. To me, in the daily time frame has get too long. That's the reading from the daily, and the shortest, the intraday, is actually getting too short. You can see how much the market has been sold, how many times has been sold from this level. And who give you this? Who gives the market this level to sell? How traders know where where to sell from, right? They're selling from this area. Can you see? And they are using previous day high here to sell. One, two, three, four times. And this high is very mechanical as well. So the odds of downside continuation here, I mean, the odds don't favor the downside. Okay, that's in the very, very short time frame. Remember, when you have contradicting information, what may be happening is that you are reading, you are observing, you are picking information from you're catching information from two different time frames. In this case, the daily and the intraday. Right? What do I expect for the rest of the day? I am totally neutral. I don't know what's going to happen. I have no idea. I wouldn't be surprised if this market has a big break, or if there's a short covering rally. These shorts now, you know, traders keep shorting this market. You can see very mechanical way to sell this market. Very mechanical way to sell. Right now, POC is at the center of the profile, right there. But what will happen? Just imagine this. What will happen if H, which is the current period, goes all the way up to this level, which is previously high, and the next period starts right there. POC will move higher, and you will see a market that is selling, 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 and coming back to the same level. Selling and coming back, selling and coming back, selling and coming back. Traders soaring in the hole. Not up here, but down here. Just imagine you are short here. What's happening here? With trades that went short here. Right. Um, the tempo is terrible, terrible. Volume, I think volume is irrelevant today because probably what will happen today, volume will end way up here today. I wouldn't be surprised if the volume ends, let's see, maybe 6 millions or something like that. Because it's the contract. Um, the contract the contract is selling here. Let me check. What do I do here? Oh, here. No, notice how it has 8 millions here. May way up here. They could end up here, I don't know. It will be more likely it will be very, very high today. So it is irrelevant. As I say, weird things can happen today. So be careful. I am out. I am flat. I have no intention to trade, especially at the close. This is going to be very, 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 very tricky, very dangerous. So be careful if you have plans to do anything. These kind of days are quite risky. Can carry a lot of risk here. This market low, is not particularly a good one, especially after the gap was closed. The market closed the gap. The market closed the gap, trade into previous day range, close the upper distribution. So at the next, when the market closed the upper distribution, the next reference in the lower side is the low on the next distribution here, which in this case is the base of the spike as well. Okay, as long as the market closes, and this is another piece of information, and as long as the market closes in this area or above the base of the spike, this is still an upside market. What are the odds now at 1 p.m., 1:10 p.m. Eastern time, the market closing this distribution, breaking and breaking all the way down to here? Don't know. It can come. It can come crashing down to here. Notice how volume, I know, how the volume is in the lower side, how high the volume we have in the lower side of the histograms. This is crazy here. Notice the volume here in the lower side. Very, very, very. This could be something. There could be something here. Okay, what happened here? That because of this, and I haven't seen. There's another one here, and there's a bigger range here. There's a range down here. All right. It seems so far, so far. Especially, everybody, is, this market, we are in the bull market now. Everybody's dreaming of huge, everybody's collecting or watching their earnings, the profits. This incredible. This incredible short squeeze that the market has been in the last, month or so, maybe more than that. The market was there were short squeezes everywhere. All right, let me show you what I'm talking about. Not to look at gold, for example. Come on, gold, man. Look at this short covering, long liquidation, range, long liquidation, short covering, range, long liquidation, short covering, another long liquidation. Gosh, man, this is crazy. What about intraday of some stocks? Look at this. Look at these long, gigantic bars here. You know, that's Apple, Amazon. Long liquidation here. Long liquidation. There's some elongation here. Short covering and this is Meta. Meta is kind of like a special stock right now. Long liquidation. I mean short covering. Long liquidation. Long liquidation. Gosh, man. And if you look these ones in the daily, shorts. Market called the shorts. Called the shorts. Called the shorts here. Squeeze. Shorts being squeeze here, and this squeeze continues here. That's Apple. Amazon. Short covering range. What the heck is this? Can you see this gigantic short covering here? There's a range and short covering here. It doesn't have any elongation to the upside here. If you put this all together, can you imagine the profile here? What kind of profile you will have? Yeah, just move this one here. You got this one here. Move this one here. You got this one here. You know, the thing is, you will have a P here. Short code everywhere, everywhere. And I will show you the same stock. This is the daily, and this is the intra. Look at this long liquidation here. Gosh, man. Range here. Oh, traders get excited here. They are forced to. They are liquid. They are getting liquidated here, and still keeps going to the upside. That's Google. Let's see, Meta. Man, this is crazy. This is Microsoft. My God, I don't know. Look at Tesla, man. Look at that. Look at this. Look at this market here. Lot of craziness here. Alcoa, Boeing, John Deere. Gosh, look at this. Short covering after short covering after short covering here. Everywhere, everywhere, everywhere shorts are well being squeezed in this market. Gosh, what the heck is it? Oh, this is Nvidia. Texas Instruments, Chevron, Exxon. What the heck is this? And look at this. Bank of America. Tremendous liquidation here. Range. You know, this could go higher here as well. The same thing that happened in the other markets can go with the banks as well. I don't know how long this can trade in range. It's a mechanical low here, but notice that there is nothing here. Nothing that will offer resistance for this market if it decides to trade higher here. You know, that's why I mean that there's a lot of short squeeze all over the place. Now, crude oil is staying in range, dollar is falling, bonds remain in range. You know, everything good. You know, nothing that could risk anything here that could put the market in risk. Actually, favor the market. You know, crude rising. Actually, I think is good now. Dollar falling also good. Bonds keep trading in range here. And there could be a breakout here of this. It could go either to the upside or to the downside. But there's a lot of buying going on here in these bonds, right? In the bond market. Now the upside, the auction to the upside has ended here. This period, I don't know what period is this one. What period is H? Yeah, it's H. Has ended. One time frame high. Okay. We have a range here. Very weak highs here. One, two, notice one, two, three, four highs here. Weak high here, and weak high, weak low as well. But there's nothing. You know, you won't believe of traders want to keep trading or wants to, if you don't do anything, then I am not a trader. But there's nothing. There's nothing. Very, very risky for me to do any kind of trade, especially when the closing is getting closer and closer. Right. Next week, let's check what do we have for next week. Next week, Chairman Powell testimony before Congress or Senate, I don't know, or the House. Again, okay, this should be Congress, and this is the House, and this is the Senate. This could be something, but there's nothing else. There are no earnings. We will see what the market do. There will be more focus on stocks now. Let's see what the market. If the, I believe, I believe this market has just got too too long, man. It just gets too long. It's just too long. It didn't have any. We didn't have any sideways trading, kind of like to give us the stair steps that can hold the market if it breaks. What is the yes? All right. There's nothing here holding this market. It's very elongated here, very elongated here. The references though in the upper side are these round ones. You have 4,500, 4,600, or 4,640, or 37, something like that. 4,630, which is this high over here. After the market has come all this high, all the way up to here, it's good. We can make a new highs, right? Sure, we can make that. One more week and we are going to have a new high, new market high. Everything is going to be nice again. We're back to 2020. Now everything is going to be business as usual. Yes, of course. Be careful, okay? Don't get the market. Don't fall asleep on your gains. Adapt, be conscious and observing, try to be in sync with the market and have a panoramic view of what is happening. All right. I hope this is of help for anybody, for somebody out there. If you have any questions, please let me know. Otherwise, this is it for today. I wish you guys a good rest of the weekend. Enjoy the family. Enjoy your weekend. Bye bye.